10 ways to invest $1,000. One common investing myth is that you need a lot of money to get started. This is sometimes true. Financial planners and investment advisors often require clients to have a relatively sizable amount of money to invest in order to work with them. Similarly, popular financial management software like Personal Capital requires $100,000 to use their wealth management service. However, while some investments require significant capital, you can still begin investing with small amounts of money. In fact, a range of investment options become available once you hit the $1,000 mark. If you can save up this amount of money, you can begin a fruitful investing journey and grow your wealth for years to come. So in this video, we will discuss 10 ways to invest $1,000. But before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Number 10. Buy a course. If you're looking for a way to invest $1,000 that's different from investing in regular securities, putting the money toward your education is an option that has life-changing potential. Unlike a college education, which generally costs tens of thousands of dollars, you can find affordable online courses on any subject to expand your skill set. If you feel like you're not getting traction in the job market or want to learn a new skill for a business idea you have, online courses offer a solution. For example, courses like 10K VA teach you how to scale a profitable virtual assistant business from home. Similarly, the Earn More Writing course helps freelance writers find more clients and increase their writing rates to accelerate their careers. Both courses cost under $500 and also grant access to a community of other entrepreneurs where you can learn from industry experts. Granted, purchasing a course is a different approach to investing $1,000 because you're investing in knowledge rather than a traditional security. However, when you consider the income-generating potential of acquiring new skills, spending money on a course could be one of the most powerful investments you ever make. Number 9. Start an online business. One of the advantages of making money online is that there are usually few barriers to entry. After all, as long as you have a reliable internet connection and computer, the online world is your oyster. Starting an online business isn't different. Unlike traditional brick-and-mortar businesses that have expenses like rent and employees, many online businesses require minimal startup capital and have low operational costs. Plus, there are numerous online business ideas that cater to different skills and industries. Some popular examples include starting a blog, getting into freelancing work, offering online coaching or consulting services, selling handmade goods on Etsy, becoming a virtual assistant for other entrepreneurs. Most of these business ideas just require starting a WordPress website with an affordable host like Bluehost to showcase your portfolio and services. Other ideas, like selling on Etsy, can require investing in tools and materials to create products. However, the bottom line is that $1,000 is usually enough to test proof of concept. Number 8. Alternative investments. Many investors rely on traditional investments like stocks, bonds, and ETFs to build wealth. This is largely because these securities are accessible, don't require much starting capital, and are more easily understood thanks to research tools and analyst commentary. In contrast, alternative investments are a less common, riskier investment option. However, if you accept a lower level of liquidity and more risk, alternative investments are a viable option to invest $1,000. Number 7. Invest in small businesses through bonds. If you're looking for a relatively safe investment you can turn to for your retirement planning or other long-term investments, you've probably considered investing in bonds. A bond is a debt instrument that helps businesses and governments borrow money. When you buy a bond, it's essentially an agreement that you're funding a loan for a specific amount of time. Bonds have a fixed rate of interest payments, and once a bond term ends, the borrower pays back the entire principal. A $1,000 investment with worthy bonds would return $50 in your first year, and you can always invest extra cash into $10 bonds. Number 6. Peer-to-peer lending. If investing in the stock market or real estate isn't appealing, another option for investing $1,000 is to use peer-to-peer, P2P lending. P2P lending, also called person-to-person lending, involves lending money to individuals or business owners, almost as though you were a bank underwriting a loan. In exchange for loaning money, you receive interest payments. How much you earn depends on the level of risk associated with a loan and the length of the loan. With $1,000, you can invest in 40 notes, which is a start for diversification. Number 5. Invest in real estate. Although it might surprise you, another way to invest $1,000 is to invest in real estate. Investing in real estate used to be prohibitively expensive. You generally need serious capital to buy a rental property. Plus, many crowdfunding websites are only open to accredited investors, which requires having a net worth of at least $1 million, an annual income of $200,000, or an annual income of $300,000 for married couples. However, you can still invest in real estate with $1,000 or less thanks to real estate investment trusts, REITs. REITs only invest in income-generating properties through purchasing real estate, providing loans, or buying pre-existing mortgage contracts. REITs are also required to pay at least 90% of profit back to shareholders in dividends. Number 4. Tackle high-interest debt. Like putting money into a high-yield savings account, paying off debt with your $1,000 isn't investment in the traditional sense. But if you can use that money to chip away at high-interest debt, the amount of money you save in the long run on interest payments can be worth it. Figuring out whether you should invest or pay off debt isn't always straightforward. However, one efficient strategy is to aggressively pay off debt with the highest interest rate in order to free up more money for investing in the future. This is known as the debt snowball method. Likely, this means putting your $1,000 and any extra cash you have towards debts like credit card debts, auto loans, or payday loans. As you eliminate your worst categories of debt, your investing options become more flexible. Number 3. A high-yield savings account and emergency fund. Although it might not seem as exciting as investing in the stock market, putting your money to work in a high-yield savings account is one of the smartest money moves you can make if you haven't built your savings yet. Putting money aside to start building an emergency fund helps protect you from unexpected expenses. A general rule of thumb is that you should have at least 6 months of expenses put aside to cover sudden emergencies, like losing your job, car repairs, or medical expenses. Although $1,000 isn't enough to get there, it's a strong start for your emergency fund and can help you get out of tricky financial situations down the line. Number 2. Invest with an online brokerage account. If you prefer DIY investing and don't want to pay robo-advisor fees, you're in luck. The past few years have seen a rise in online stockbrokers you can use to buy individual stocks and ETFs to create your own portfolio. Plus, many stockbrokers don't charge commissions on stocks or ETFs, meaning your trades don't cut into your starting investment. You should also consider how frequently you want to trade and whether investing in fractional shares is important. Fractional shares let you invest with a small amount of money, so you can still invest in expensive stocks like Amazon or Alphabet, Google, without buying entire shares that may cost more than $1,000 apiece. Number 1. Use a robo-advisor. If you want to invest $1,000 as passively as possible, using a robo-advisor is your best option. Robo-advisors automate your investing strategy by investing your money into assets that match your long-term goals and risk tolerance. Typically, robo-advisors invest in various stocks, bonds, and exchange-traded funds, ETFs. Many leading robo-advisors also offer features like portfolio rebalancing, dividend reinvestment, and even tax loss harvesting. Robo-advisors aren't the same as financial planners. With a financial planner, you get tailored financial advice, which typically covers topics beyond just investing, such as budgeting and estate planning. Thank you guys for watching. If you want more videos like this, make sure to like the video and hit the subscribe button, and we'll see you in the next video.